Hello, this video is about how Pokemon teaches you about diversification. I just want to give a quick disclaimer though. I'm not a financial advisor. I'm not even a finance student. I'm an accounting major who likes investing in stuff. So don't take anything I say too personally. One of my favorite Pokemon is Crobat. Does that mean I'm gonna go into a battle with 6 Crobats? I mean, maybe, but probably not. Why is that? It's because if I wind up going against some rock, electric, or psychic types, I'm gonna get completely swept. The entire squad shares the same weaknesses, there's no versatility, and no chance against a half decent opponent. In other words, the team isn't diversified. Now, diversification isn't just a Pokemon strategy, it's also one of the most important principles in investing. Once you see the connection between building a Pokemon team and building an investment portfolio, maybe you'll learn a thing or two. It's probably the only way you'll ever learn what diversification is anyway, because of how much brain rot we deal with these days. As we've realized, when you put together a Pokemon team, don't just grab your 6 favorites and call it a day. Sure, maybe you love fire types, but if your whole party is made up of fire Pokemon, you're going to be in trouble the moment somebody pulls out a water move, unless you have drought or something. A smart trainer thinks about coverage. You might want fire for offense, grass to counter water, psychic to deal with poison, maybe a flying or a ground type for extra balance. This is diversification in action. You're spreading your risks so that no single weakness can take down your entire squad. You're creating like a safety net. If one Pokemon faces a Pokemon that counters it, another can step in and cover that gap. Investing works in the same exact way. And let's say you put all your money into one stock. It's like betting your whole team on one Pokemon. Let's say you put all of your life savings into some Pikachu meme coin. You mortgage your house, max out all your credit cards, and take out money from your kid's college fund and throw it all into this meme coin because you're trying to get rich. If that Pokemon meme coin crashes, or should I say when, your whole financial future goes down with it. But if you diversify, if you spread your money across different companies, different industries, even different countries, you're a lot more protected. Maybe tech stocks are having a bad year, but healthcare and real estate are holding steady. Just like in Pokemon. When your fire type faints, your electric type is ready to pick up the slack. Diversification is about not being overly reliant on one thing. You don't know what your opponent is bringing to the battle, just like you don't know how the economy will perform next year. Diversification makes sure you're ready for surprises. Diversification isn't only about avoiding weaknesses though, it's also about creating synergies. In battles, you don't just think, okay, I need a water type because fire is common. You also think about how your Pokemon complement each other. Maybe your dragon type is weak to dragon, so you're like, okay, let's add a fairy type to cover that gap. Or maybe you choose to support a Pokemon with moves like Reflect or Heal Bell to make your team stronger. Investing has a similar dynamic. Stocks are heavy hitters, they have a lot of power, but they're vulnerable to downturns. Bonds, on the other hand, might not feel exciting, but they provide stability once those stocks fall. Put them together, and your overall portfolio is much stronger than having either one or the other. This balance matters even more when you look at the business cycle. The natural rhythm of a peak, contraction, recovery, and expansion that the economy goes through. In the good times, the stocks always lead the way. But when recessions hit and the market stumbles, bonds are ready to step in and steady that ship. By combining both of them, you're not just building a team, you're preparing for the whole cycle of booms and busts. The right mix of Pokemon cover weaknesses and amplify strengths. The right mix of investments do the same thing. When building the perfect team, you also need to take into consideration cost and benefits. By that I mean the amount of time you put in. Ultimately, you can spend literally hours perfecting your Pokemon team, having the right types, IVs, held items, abilities, and whatever to work well together. But is this really what the average person would want to do? Me personally, while playing Pokemon, I just care about my coverage and I care about leveling because I know that trying all that stuff would just discourage me and make me get bored. In finance, the same thing happens when you try to perfect everything. If you own hundreds of different random stocks and funds, your portfolio just becomes a market at that point. You lose focus and you don't actually gain that much more protection than if you just chosen a simpler, more balanced mix, maybe like an ETF, maybe some bonds here and there. Also, you might just get scared of investing as a whole because the prospect of having to do all of this would just scare you off. The goal is not to own everything. The goal is to have enough variety to protect yourself while keeping a clear, purposeful strategy. Now, some trainers think they don't need diversification at all. They just say, okay, I'll bring my Rayquaza, Pokemon Emerald style. It's so powerful, I don't need anything else. Then they get hit with an ice beam by some bear tick, they get crit and completely destroyed. That's like an investor saying, I'm going to put all my money in Apple or Tesla because they're unstoppable right now. But here's the problem with that. Every legendary has a weakness. Even the strongest Pokemon can be countered. And even the most successful company can stumble. And if that happens and you don't have any backups, then you're done for. If you go back 20 years, there were companies that people thought would never fail. Think about Blockbuster, which dominated video rentals, or BlackBerry, which was once the king of smartphones, or even Enron, which was considered one of the most innovative energy companies in the world before it collapsed overnight. At that time, they looked untouchable, like the legendaries of their own industry. But eventually, new technology, poor decisions, and outright scandals took them down. The lesson is clear. No matter how powerful something looks today, nothing is guaranteed forever. If you rely on one legendary investment without backup, you're exposing yourself to the same fate as a trainer who only brings one OP Pokemon. When it goes down, so do you. And even if that legendary never faints, you're still missing out on the power of synergy. A well-built team doesn't just survive weaknesses, it wins because of how its members complement each other. Like when a support Pokemon sets up Light Screen to make your sweeper unstoppable. Or Baton Pass to give off Swords Dance to somebody else. The same goes for investing. It's not just about avoiding disaster, it's about capturing the upside that comes when you have different assets that work together.